The Nifty is down about 90 odd points. It's a 0.5% cut that you're staring at on the index.
The Nifty, as we speak, is holding above that 18,500 mark.
As far as the markets are concerned, it has fallen sharply from the highs. So it's a 50-point cut that we're seeing on the Nifty.
About 25 odd points downward pressure in the last 10 minutes. So 18,445. It still counts as a decent, good recovery from the lows. The market, by the way, recovering all of the losses and all of the gains coming through pretty much in the last 60 minutes of trade. We were down 60-70 points and we end with 10-point gain now on the index.
Well, it was a flat session today, but in that flatness, it told a lot. We opened with a gap down, and then from there, we recovered a smart bit over 150 points and ended absolutely flat. But that was as far as the index is concerned. At the mid-cap end of things, we had that index outperform by almost 1/3%, and that should make portfolios happy. That was the story of the markets today. You're watching us here on Markets Today on CNBC TV18. We track 6 hours of trade in 5 headlines. I'm Manglam Malu. Let's talk about those headlines then. Indian indices closed flat after a range-bound session. The Sensex slipped 51 points while the Nifty ended marginally higher. It was the broader markets which outperformed, with the benchmark mid-cap index gaining about 1/3%. IT companies turned cautious on growth. The management of HCL Tech and LTI Mindtree say that higher than usual furloughs could hit third quarter revenues, while Mastech says repurposing of spends with a cost focus is delaying order flows. Air traffic exceeds pre-COVID levels, with over 4 lakh passengers taking to the skies yesterday on the 11th of December. Interglobe aviation higher by 3% on the news. Also aiding is lower oil. Talking about oil, the rupee falls close to 1-month lows as higher than expected US purchaser price index strengthens the dollar, but lower crude oil prices support the rupee. In big news towards the end of trade, we had Dalmia Bharat acquiring cement, clinker and power plant from JP Associates for 5,600 crore rupees. The stock rises in trade as the deal adds cement capacity of more than 9 million metric tons per annum. Meanwhile, positive brokerage commentary helps Punjab National Bank and IndusInd close with gains. Let's tell you what we have lined up for you on the show today. It's a packed one. In Market Opinion, we have Manish Chaudhary of BNP Paribas and Corporate Voices, big names from the IT industry, C. Vijay Kumar of HCL Tech and Ashank Desai of Mastech. Let's then go straight to the market action. A range-bound session that saw the market end the day flat. The Sensex was down 50 points, while the Nifty ended marginally higher in line with the 20-day moving average. The broader markets actually outperformed. The mid-cap index gained almost 1/3%, with stocks advancing marginally, outbeating the declining stocks. Prashant Nair joins in with more details.
It would have been a down day, and perhaps a meaningfully down day, who knows, except the fact that the market pulled back very sharply in the last 60 minutes, and the close was absolutely flat. Banks did their part. I mean, the Bank Nifty was much better. PSU Bank Index went from strength to strength, ending almost 1.5% higher in trade. Actually, let me begin there because, that's the part of the market where there is momentum, and at the margin there is expectation that things are getting better. But, gains beget gains, momentum begets more momentum, and I think some of that can explain what we are seeing. Punjab and Sindh, the stock's up 80% this month. It's caught up with the rest of the pack. Union Bank, Indian Overseas Bank, PNB, Bank of India, that's the part of the market which saw large gains. Oil marketing did very well. HP, BPCL and IOC, we had highlighted that viewers keep an eye on HPCL and oil marketing in the morning, and HP was up 5%, so that was good. What was down today in the Nifty? Asian Paints, Infosys and Titan, so there were cuts in these names. Technology is once again a bit of a trouble and a bother spot because of what HCL Tech has said, and that's rubbing off on the rest of the pack. Broader markets, advances, declines, not that much gap, but what went up, I think by far exceeds what went down, and with volume. So I'm just going to list out gainers: Yes Bank, IRFC, IRB, Suzlon, Reddington, HCC, RVNL, and so many other names like CSB Bank, Jayaprakash Associates. Of course, there was a deal there, and the stock did very, very well. The Nifty at close has once again left off exactly at the 20-day moving average. So it's still decision time in that sense, what it wants to do. It's a short-term moving average, which is widely tracked. The big events which may trigger this decision perhaps are the US events, which is the CPI number later this week, and followed by then the Fed decision. Back to you.
Take that point. A lot of central bank cues coming in this week itself. So the markets, understandably, range bound ahead of that. Not particularly bad, but let's get in some more market opinion. Manish Chaudhary of BNP Paribas said that they've turned more cautious on the Indian IT services sector, and on the auto space, they have a positive outlook on the larger players with a strong distribution network. Actually, let's hear him out and his views on the markets.
We have incrementally turned a little more bearish, a little more cautious on the IT services sector. In fact, this downgrade to India that we did, it's really concentrated in two sectors. We have taken out exposure to the consumer staples sector, lock, stock, and barrel, and we have reduced exposure to the IT sector quite significantly. We still like the auto stocks, the four-wheelers, and in particular, the top-rung frontline four-wheeler companies, which not only have market leadership and therefore have pricing power, who are also the beneficiaries of a very large distribution network. We are adherents to the concept of affluent consumption in India, and we think that that's a theme that's likely to play out. It's already been playing out for the past 6 months or so, and it's likely to play out for much longer.
To the second headline now. IT companies were in focus as the managements have turned cautious on growth, just as what Manish Chaudhary spoke about these companies. LTI Mindtree lost 2% today after the management told MK Global that revenue growth in the third quarter could actually be hit by higher than usual furloughs. Reema Tendulkar joins in with more on what the management's expectation for the coming quarter for the IT space would be.
Thanks so much for that. So MK met with the CFO of LTI Mindtree, now a merged entity, and the investor relations head. And these are the key takeaways. They're saying that Q3 revenue growth is going to be impacted by higher than usual furloughs, lower number of working days on site, as well as elimination of certain revenues which are common, right? Common clients, common revenues after the two entities got merged. They are also seeing delay in decision making in the retail vertical, consumer packaged goods called CPG, high tech, as well as energy and utility. They're also saying that the margin trajectory for the merged entity will be lower in the second half of the year. One, on account of moderation in the revenue growth, and plus there will be one-off costs related to merger and integration, which should be to the tune of 100 to 150 basis points in Q3. That said, despite all the macro uncertainty and the warning, the warnings that we're getting from a lot of the clients, LTI Mindtree does not expect a delay in finalization of the client budgets, though they do plan to slow down hiring next year, considering that attrition has started moderating and they want to focus on utilization. They're saying that all the merger-related processes should be completed in FY23. Those one-off costs that we spoke about, which will impact their margins. So FY24 will be business as usual for the merged entity. Back to you.
All right, Reema, thanks a lot for that. HCL Tech too saw a sharp fall in today's trading session. In fact, on Friday, as the company said it expected revenue growth to come in at the lower end of their FY23 guidance, we caught up with C. Vijay Kumar, who's the MD and CEO of the company, who said that the downward revision in growth estimates is driven by higher than anticipated furloughs, not too different from what the management of LTI Mindtree said as well. So let's hear out the management from HCL Tech.
It's maybe 3 or 4 clients in these verticals. That's what I would say. However, one should keep in mind, we did talk about the bookings. We expect to have a decent booking. The deal momentum is very robust, especially the vendor consolidation and the cost efficiency led deals. Currently, our guidance is 18 to 19% for this fiscal, but our aspiration is to get back to the 19 to 20% range as we move forward. So good deal momentum and good progress on all the cost levers that we have been working on. No, half the year is over. You know what the first half margin profile was. We will do better in the second half. We had a good benefit of realization in the last 6 months based on all the billing rate enhancement that we were driving. But moving forward, I think getting increases may be difficult. but I expect the pricing to be stable because still for some niche skills and some of the newer skills, the demand is quite high. So I think the pricing, I expect it to be more or less stable as we move forward.
All right, and the managements of LTIM and HCL Tech weren't the only ones. We had commentary coming in from Mastech VC and MD Ashank Desai too. He confirmed that the furloughs were adding to the pressure.
There are some things that are going to happen in economy as projected at the end of the year. There may be more focus on cost saving, which is good for us because that will be more offshore. So all that repurposing of the budgets is leading into delay in the decision making. So as we see it, we do not see any impact on the budgets as such, but we do see a delay in decision making. So the whole issue now is how do we do account mining with our existing accounts so that wherever we are already in, we can grow. And that's what we are doing. There are furloughs and this quarter with holidays and lower working days. That pressure is there in this quarter, and that will remain. 1 billion number is really an aspirational number rather than saying target. And we are, of course, would like to continue to work using that force and that vigor and repurpose strategy and so on. But we are looking at 1 billion as not a number which is kind of a target setting or a guidance, but more as an aspiration that we want to become and reach there as soon as we can.
All right, let's move on to some news on satellite. MTAR Technologies signed an agreement with Indian National Space Promotion and Authorization Center to design and develop low-orbit, all-liquid, small satellite launch vehicles. Managing Director Srinivas Reddy told CNBC-TV18 that the company could eye a potential revenue of anywhere between 300 to 500 crore rupees from this in the next few years, and also 150 to 200 crores coming in from their other innovations in the next fiscal.
Where 80% of the world market is for small satellite launch vehicles. This will be a fully integrated system. It will be a product of MTR itself with the help of InSpace and ISRO to develop this. Once we do the developmental flights, it's a 3-year program. Once we do the developmental flights, then we take commercial flights to launch satellites for various customers. We are looking at anything between 300 to 500 crores of revenues being generated progressively for launching the satellites for various customers. So that's the main goal for the company. It's a project which we are taking it very seriously.
Let's move on to some news coming in from the global IT space. Microsoft has announced a 10-year partnership with London Stock Exchange, buying a 4% stake in the UK bourse. The tech giant will also purchase this stake from Blackstone, Thomson Reuters Consortium. Microsoft will develop a new data infrastructure for this bourse. Let's move on to the next headline for the day, and this is something that we've all recently experienced at airports as well. Air traffic has exceeded pre-COVID levels with over 4 lakh passengers taking to the skies yesterday. The news helped Interglobe Aviation gain 3% in trade today. Sonia joins in to tell us more. Sonia.
Well, amidst all the chaos that you're seeing at the airports, both in Delhi and in Mumbai, the data that's coming through also indicates that the air traffic is very strong. And as you rightly pointed out, this is an all-time high, at least compared to pre-COVID levels, compared to 2019. This is the highest that we're seeing on a per-day basis. The domestic air traffic, as per the Ministry of Civil Aviation website, on the 11th of December, has hit a level of 4.27 lakh passengers in a single day. And the load factors across the board have increased substantially. So if you look at it, all airlines clocked in passenger load factors of over 90%, with Air India the highest at 96.6%, Indigo at 90.7%, SpiceJet at 95.2%, and Vistara and Go First at 93 to 95%. Now, a lot of the aviation stocks have also been rising, one because of increasing passenger traffic, two because of ticket fares have been on the surge, and operationally the lower crude prices will definitely benefit them. This will result in lower ATF prices. If If you remember, crude is down $20 per barrel in the last 1 month itself. So these are a couple of factors that are, the reasons why the aviation stocks are doing well. In fact, Interglobe Aviation, if you map the chart of the last month, actually from the month of June, if you look at it, Interglobe Aviation has risen 26% from the June lows purely because of these factors. Overall, if you look at it on a month-on-month trend, the latest data that we have for the month of October and November indicates that the passenger traffic, even on a month-on-month basis, has improved substantially. Back to you.
Take that point, Sonia. Thanks a lot for that. On that note, we'll take a short break, but you stay tuned. We will be back in a jiffy with all the other headlines.